Good afternoon. Thank you for the invitation. My name is Duarte. I'm Investment Director here at Tricoma Capital. My background is mostly on fixed income and derivatives. I worked 20 years in the financial markets. I worked for private banks here in Portugal on the buy side and sell side. I worked 10 years at the Portuguese debt management office. I was head of trading there, mostly dealing with government bonds. I also teach at the university. I teach computational finance, algorithmic trading, and crypto assets and blockchain. Our main fund here at Tricoma Capital is the Portuguese Golden Income. It has had a lot of traction in the last years. And I'm here maybe to do a small comment on the Portuguese bond market. Portuguese government bond market is one of the most stable and attractive in Europe, showing notable improvement in both terms of yield and investment perception when compared with Southern European countries like Spain and Italy, and remaining somewhat above Northern European countries like Germany and the Netherlands. In Portugal, the corporate bond market is a small but relevant segment of the country's capital landscape, distinguished by relatively reduced size compared to other European markets. Corporate bonds issued in Portugal have become increasingly attractive. Investors seeking stability and predictable returns, especially as investment vehicles associated with programs like the Golden Visa, which the Portugal Golden Income is part of. The market provides access to bonds from both private corporations and key state-owned enterprises that may not issue equity, which broadens the investment options beyond limited listing on the stock exchange. Portugal corporate bonds tend to offer above average returns relative to their European peers, while maintaining historically low default rates. Typical annual yields range between 3 and 4%, which positions them as favorable options for conservative investors looking to preserve capital and earn a steady income. Bonds can include fixed interest and variable interest, with issuance ranging from non-subordinated unsecured notes to mortgage-backed securities and credit securitizations. This diversity reflects evolving needs of both seasoned financial institutions and newer issuers making use of the debt capital markets. A notable feature of the Portuguese market is the impact of the European Central Bank. Policies such as the CSPP, the Corporate Sector Purchase Program, the ECB's actions have generally led to lower bond yields, with stronger direct effects observed for eligible Portuguese bonds, as opposed to broader European average. The bond market itself is well integrated within the euro area, and trading volumes have been growing, with greater activity and diversification, especially in ESG bond adoption, which is increasing trend across Europe. So, to sum up, Portugal continues to strengthen its bond market, standing within Europe, benefiting from lower yields and stable politics. Relative to Southern European countries, Portugal enjoys reputation for resilience and fiscal prudence, narrowing risk spreads and supporting ongoing stable financing. So, thank you for your time, and hope anything you want to know about us, please contact.